We are here today to announce the filing of criminal charges against HSBC Bank, both its U.S. entity, HSBC U.S., and the parent HSBC Group, for its sustained and systemic failure to guard against the corruption of our financial system by drug traffickers and other criminals, and for evading U.S. sanctions law. As part of its resolution of these charges, HSBC has agreed to forfeit $1.256 billion, the largest forfeiture amount ever by a financial institution for a compliance failure. They have also agreed to pay civil penalties of $665 million to resolve the parallel regulatory actions brought by the Office of the Comptroller of the Currency and the Federal Reserve Bank, for a total recovery of over $1.9 billion.
As we reported last night, JP Chase has tentatively agreed to pay the biggest corporate fine ever. The total includes $9 billion in penalties plus $4 billion in consumer relief, including home loan modifications. But the criminal case continues, and so do other questions.
Britain's two biggest taxpayer-backed banks were hit with huge fines this week. RBS is to pay $100 million for violating US sanctions against Iran, Sudan, Burma and Cuba, and Lloyds is to pay £28 million for retail conduct failings, the highest ever fine.
The Bank of America agreed today to a record settlement, nearly $17 billion, over its role in selling bad mortgages as instruments that helped trigger the financial crisis.
Attorney General Eric Holder.
The size and the scope of this multi-billion-dollar agreement goes far beyond the cost of doing business. This outcome does not preclude any criminal charges against the bank or its employees.
Barclays and Credit Suisse are set to pay more than $150 million to settle charges that they misled investors using dark pool trading platforms, according to the New York Attorney General's office.
Lloyds Banking Group has been fined a record £28 million for a sales incentive scheme in which staff had to hit targets or face possible demotion. The Financial Conduct Authority says workers were under pressure to sell products to customers even if they didn't need them.
On Wednesday, the Federal Reserve hit Wells Fargo with an $85 million fine for supposedly steering borrowers into high-cost subprime mortgage loans, even if they were qualified for safer loans.
Citigroup has agreed to pay $7 billion to settle a U.S. fraud investigation into its involvement with mortgage-backed securities leading up to the 2008 financial crisis. That is the largest civil fraud penalty ever paid by a bank, and it is because Citibank admits that it made serious misrepresentations about the financial products that it was selling. And that is why U.S. Attorney General Eric Holder says that the penalty is appropriate given the strength of the evidence of the wrongdoing committed by Citi.
This morning, Deutsche Bank has settled allegations from the SEC that it materially misstated its financial accounts during the financial crisis. And we should say that, as is often the case with these cases, Deutsche has neither admitted nor denied the allegations, but it has paid what is a relatively small settlement in the context of recent fines on the industry.
Bank of America has agreed to pay the equivalent of nearly €560 million in fines and refunds to customers. US regulators ordered a settlement over allegations of deceptive marketing and unfair billing linked to credit cards. Bank of America is the latest to pay fines to resolve allegations of unfair practices involving such products. Others include Capital One Financial, American Express, Discover Financial Services and JP Chase.
JP Chase Bank used to lend money to Lehman Brothers. On Wednesday, the Commodity Futures Trading Commission, an independent agency of the US government, ruled that JP Morgan used money belonging to clients of Lehman Brothers as though it was JP Morgan's own money. JP Morgan overextended Lehman Brothers' credit and loaned against it, which some economists say contributed to Lehman Brothers' downfall. But instead of a prolonged court case which could generate negative publicity, JP Morgan has settled the dispute. The world's largest bank has agreed to a civil fine of $20 million.
Wall Street bank Goldman Sachs will pay $5 billion to settle claims that it duped clients with rotten mortgage investments that Goldman knew were likely to fail. This was part of the widespread mortgage fraud that triggered the Great Recession in 2008.
The Swiss bank UBS has agreed to pay around $1.5 billion to settle charges that a group of traders at its Japanese unit rigged LIBOR interest rates.
The Royal Bank of Scotland has been fined £390 million for its part in rigging the interbank LIBOR rate. The Financial Services Authority says the rate was being fiddled right up until the end of 2010. That's 2 years after the bank was bailed out and given a new boss.
Shares of Deutsche Bank are higher after the bank admitted to criminal wrongdoing for its role in fraudulent tax shelters. Reuters reported the bank agreed to pay $553.6 million to settle the case.
The officials say U.S. banking giant JP Morgan and Swiss banks UBS and Credit Suisse manipulated the prices of derivatives and LIBOR. That's the benchmark interbank lending rate between banks on the London market. European regulators in December handed out fines totaling more than $2 billion to 6 other financial institutions for their role in the scandal.
Barclays getting hit with a $450 million fine by U.S. and U.K. regulators. Barclays admitting that it submitted false London and Euro interbank offered rates between 2005 and 2009 to make a profit from trading positions.
The world's foreign exchange market, or Forex as it's known, is so big that regulators thought it simply could not be manipulated. So it was largely unsupervised. That gave traders from 5 banks a window to make huge profits and huge bonuses.
Now, the prices the market sets for those currencies influence virtually every sector of every economy in the world. Their actions inflated the bank's profits while harming countless consumers, investors, and institutions around the globe, from pension funds to major corporations, and including the bank's own customers, who placed their faith in the market and relied on it to produce a competitive exchange rate.
One day after Credit Suisse pleaded guilty to helping Americans evade taxes and agreed to pay a €1.8 billion fine, the bank says it has seen no material impact on its business.
Credit Suisse has agreed to plead guilty to criminal charges related to this pervasive illegal activity.
BNP Paribas, France's largest bank, has pleaded guilty in New York to a federal charge of violating U.S. economic sanctions. The bank has agreed to pay nearly $9 billion.
Oliver, another round of fines for the global banks today, this time for rate manipulation in the foreign exchange market. I must confess to you, I have trouble thinking this is news. After round of fines for violation after violation, I am extremely tempted to just shrug my shoulders.